Hey traders, welcome to Charts and Coffee. Hope everyone is having a great Friday morning. Happy March, everyone. Can't believe it's already March. We're the first 2 months of the year gone. They've gone in an uptrend. That's what they've gone in. So let's go ahead and take a look at what we're dealing with as we begin March. Now, there was a white paper that was done many, many years ago, and it was done during the time of the window of the rally that occurred after '08 and everything that happened in the wake of '08. But these Finnish researchers, it's not their fault. They were doing the study then, but they noticed a tendency. And again, I emphasize tendency. It's not a trade. It's not a setup, but they noticed a tendency that at the end of every month, there tended to be some selling, people getting their distributions, whether that be retirees or whomever, paying themselves at the end of the month. So there'd be a little bit of weakness the last 3 days of the month. That was the most punctuated part of it. And then as you go into the new month, the first 3 days of the brand new month, if in an uptrend, which was exactly what was happening during the time of them doing the research for the white paper, there would be some buying. So there's usually, right, just kind of an overarching expectation of some selling as we go into month end. But within the context of an uptrend, there's usually a little bit of buying. So folks will reinvest or they'll put more money into the stock market at the beginning of the month. And so I keep that in the back of my mind, not that I'm just going to be a buyer, but that there is a tendency for more bullishness for the next couple of days. That being said, those types of tendencies. Now, tendencies are the same thing as seasonals. Tendencies are the same thing as, say, the pit bull low, Santa rally, sell in May and go away, which, my gosh, I wish that saying would go away. But those things are just sort of overarching generalities. And then when we as traders, educated traders, can take that information and say, oh, there's a tendency for humans to do this. Let's see if there's a setup there. And now you've got trading, right? And yes, we are in an uptrend. In fact, as of the last handful of days, we're actually seeing even the Dow, which was sort of trailing behind the clarity of uptrend in the NASDAQ and the S&P. Here comes the Dow. And you might say, well, Rob, yeah, why is the Dow now all of a sudden moving higher? S&P and NAS, why did they take the lead? And it has everything to do with what's inside the Dow. And what's inside the Dow is a lot of financials, which continue to be strong. And I'll tell you what, one of the best sectors right now, which is industrials. We don't talk about industrials a lot because it's not tech, right? Now, I get why there's a tech emphasis because of the weighting, say, the Magnificent Seven have, or more specifically, the weightings of stocks within the XLK have Apple, Microsoft in the Dow, the NASDAQ, and the S&P. So when I look at industrials, that's very uniquely a Dow thing, which, by the way, Dow Industrial Average is in name only anymore. It's really the Dow Financial, Tech, and Healthcare Average. But nonetheless, keep an eye on XLI. It's been moving and grooving, and it's got a gorgeous uptrend, definitely established throughout March. And if we're looking for maybe that tendency to kick in, this is a great candidate for it. All right. So that being said, as always, and a quick shout out to my folks on Twitter, or X, my gosh, X, YouTube, whether that be the Simpler Trading YouTube channel or my YouTube channel at Raghee Horner. Big shout out to our folks in the Essentials Room. All right, let's get to it. If you have any questions, feel free to type them in. Phone lines are open for your requests. And let's kick it off. Good morning. Good morning. All right, Grace, how are you? I have a question regarding my GE trade. Okay. Your teaching has been waiting for a pullback to the 34 EMA wave. Is GE extended now? Thank you for asking that, Grace. I love the wave. The wave is the 34 EMA on the high, the close, and the low for those of you that are not familiar with it. And it's what I would consider to be a mean reversion for me. Not the mean reversion, a mean reversion. Everyone's got a different idea of what the mean is. For me, it's really that average of the 34 periods. Could be a 5-minute chart, hourly chart, or daily. Now, mean reversions are different than pullbacks or retracements or even by the dip. It's one version of those things. And GE, S&P, NASDAQ. I could have a list of these things. If you notice, much as I have, while the wave is absolutely plotting that mean reversion and we're on the north side of it, which is the bullish side of it hasn't been coming back. And the reason that it's not is you're right, it's quite accelerated. I don't know if I'd call it extended. I don't believe there's such a thing as really an extended uptrend, because I want to be careful using words like that, because it somehow suggests that we can pick tops and uptrends, which, newsflash, we can't. Not with high probability. However, daily price movement ranges, the DPMR, is another type of buy the dip zone. And its calculation says, hey, Rog, no problem. If we're not getting a mean reversion to price means, right? Now, what do I mean price means? Open, high, low, close, right? Maybe we're getting a pullback, a mean reversion, if you will, to a volatility zone, right? There's a typical number of points. Any symbol tends to move. And then we can, from that, extrapolate, calculate, algorithmic, right? That's kind of what it is. It's an algorithm that says, hey, this is where the volatility-based support is. And that's the gray zone. Grace, we have been leaning on this a lot the last year because this is the way price behavior is. And it isn't just GE. It's I'm trying to think, we have a trade open in Disney. We have a trade open in American Express. American Express is another great example, very GE-like, where we have some mean reversions. That was gorgeous, as you can see here. However, the DPMR is still in play. So daily price movement ranges, not that they're ever going to replace, right? It doesn't have to be supplanting something else. It could be just supplementing, right? And so when I look at the mean reversion, they're still going to be extremely powerful, but rarer, right? And we want more opportunities. We want more windows opening as traders, and the windows open a lot more often with high probability with those daily price movement ranges. And that's how we're dealing with, as you mentioned in your words, the extended. That's how we're doing it. Yeah, absolutely. All right. So next up is XLP. Hey there, Ren. Sure. So staples have been in that upper section of the relative performance. And, if you've been watching this show for any period of time, relative performance is a big deal, is a really big deal. It's one of the main factors. It's one of the main things that will get me into a trade. It's one of the main things that builds the watch list. It's one of the main things we focus on. And if I take a look at something like SMH, XLC, XLK, XLF, XLV, keep going down the list, and Ren, there's your XLP. It's on the upper half of the zero. The zero line is that rather faint, but you can see it there. Where XLE and XLB meet on this graph is where the zero line is. XLB is just below it. No, just above it now. And you have XLE and XLE. So XLB and XLE. XLP is up there too. And so I will be more likely to look for opportunities to the long side. Now you might say, Rob, how do I take this list and then figure out what it is I want to do? And that's exactly what the sector secret is. So I look at where the relative performers are, and then now I'm going to take my indicators and say, all right, of the names in XLP, which ones are in uptrends, right? Procter & Gamble, Costco, Coke. Oh, no, not Coke, sorry. Walmart, Colgate, Target, right? So I lean back on my dashboard, if you will, of what color codes, traffic light symbol. I love the analogy of a traffic light, because if any of you have traveled outside the US, I'm sure a lot of you have, you go somewhere else, and why is it that we can drive? I know sometimes opposite side of the road. I made one big mistake one time, and I rented a car in the islands and realized I drive on the other side, and that was a nightmare. The car stayed in the car park, and that's it. I didn't drive it. That being said, for the most part, we can travel anywhere, and lights are lights. Green is go, red is stop, yellow is be careful. Speed up. I think yellow might be speed up. So if I look at just the simplicity of green momentum, that's bullish. Green trend, that's bullish. Now I ask myself, XLP is bullish. To your point, Red? Absolutely. And then so are these stocks. And that's the way you build relative outperformance watch list. That's how we're able to grow our accounts, find things that are going to keep going. Yeah. Is it too late to take a run into earnings for Adobe? Well, if I'm going to play a run into earnings, Larry, I'm going to do it starting about 6 weeks out. The sort of prime time window for what I'm looking to do is really not too much more inside of 2 weeks, right? So that's the first thing. So if I'm looking at Adobe, let's pull that up, and I see that earnings are on March 14. I'm inside that window just by a smidge. Is it too late? It's right on the cusp. But more so than that, right? So that's just time. The bigger issue with Adobe is this is not a run into earning stock for me, right? Because while from a calendar perspective, you're correct. We're right on the edge. So kudos, it's really close. The implied volatility is increasing, giving more favor to, it's going to favor premium writers versus people like myself, premium buyers. So if I'm looking to buy premium, I don't want to see implied volatility increase too much. It's going to increase the cost of my option and ultimately my risk, right? That said, another criteria would be, is this something that I would expect to run into earnings? So it's got to be something that's already moving in an uptrend. And if it's not moving in an uptrend, that's not something I'm going to say, you know what, I don't need to focus on Adobe, because what's the probability of something that's arguably in a downtrend all of a sudden reversing course 2 weeks out? So that's where the wheels fall off the wagon for me. I really need to see something that is already showing uptrend characteristics. Now you might say, Rog, it's bouncing off the 200 on the daily. That's about the most bullish thing I can say. And that is at least something. Just be cautious on that one, Larry, because while it does have a little bit more now some interest to the long side by staying above the 200. I think there are probably better, in my estimation, when I look at that many red grab candles, my thought process, my sequence is, there's got to be something that looks more bullish than this. So I'll just try to find something better, if that makes any sense. And thank you for the question. And by the way, for those of you that are not familiar with the way that I trade earnings, the Trish Boss, as we endearingly call her in the Sector Secrets Mastery, has put many updates about the 642 earnings window over at, if you haven't checked it out before, countdowntrader.com. Countdowntrader.com. So in fact, if you go to the Google, all seeing, all knowing Google, and you type in Countdown Trader 642, the number 6, the number 4, the number 2 window, all those updates will appear on Google, and you can check out the process. She's laid it out step by step in numerous updates there. So if you're curious about, yeah, Rog, how do you play earnings? And oh my gosh, next week we're getting the window opening. Yes, we are. We are no sooner finishing earnings season and we're preparing for the next already. Sacre bleu. So there we go. Thanks for the question again, Larry. Let's see. Next up, Smoke Divine. Yeah, I'm glad you're buying the dip, but it's you doing it. I appreciate everyone's time, and sometimes we're not going to sound like everybody else. Sometimes we're not going to be as pessimistic or jaded or the crash is coming as everybody else. But time, decades have taught me that if the markets are rigged, and I hate that, I even hate that rabbit hole, but if they are, they're rigged to the upside, right? Especially when we're going into an environment where the Federal Reserve is preparing to cut rates. And whether they do it in June, whether they do it in May, whether they do it in August, it doesn't matter, because we collectively, traders and investors, will start to take advantage of that expectation far before it's a reality, right? Okay. So next up is, what is the website? Excuse me, Sergio. What is the website where I share all those sectors? That graph, koyfin.com. KOYFIN.com. All right, where does my eye go first when I look at a flex grid for the sectors? Where does my eye go first? Interesting question. Okay, let's crack open XLC, which is the number two weighted sector in the NASDAQ. And it's also the number 2, I believe right now, sector in terms of performance. I'm going to start at what I call the tide, Anthony. I'm going to start with XLC, but I'll also keep in mind that index sector stock matters. I already know that the Nasdaq's in an uptrend, and then the green, What's going up with the index? What's going up with the sector? All right. Next up is XBI. Okay, sure. I'll be perfectly straight up, Jan, about this. I do not tend to trade biotech, whether it's XBI. I tend not to. So please know it's coming from someone who rarely has any skin in this game. It's in an uptrend, though, right? So two ways you can look at this. If there's liquidity in XBI, which, like I said, I haven't looked at this one in many moons. And if I look at the 15 March, oh, it's pretty liquid. Okay. And then I'll also consider cracking open the XBI. I don't even know that I have it listed. I guess I don't. So I would create a multi-grid, put it, if this is I don't even remember if this is high concentration weighted or not, but then I would create a that flexi grid and put those stocks in order of their weighting in that grid. But yeah, buy the dip's going to work. That's the probability within the overall uptrend north of the 200. What's not to like about it? XLRE. It's not an uptrend right now, Tom. However, it is in the bullish hemisphere. But this is where if I have a symbol that's above the 200, but it's moving back and forth, right? We're in chop. What I'm going to have to do is, well, the structure dictates the strategy. The strategy dictates the secret squiggles, aka the indicators on our chart. So if I've got a neutral environment, now I start looking through my indicators asking what's going to automate the support and resistance for me? Which side of the trade am I on? Long, so support. And then which is going to confirm that when we get down to that level of support, that I indeed have a potential buy. And this is for me very much a bullish bias, but neutral. So bullish chop. Darvis plus slow stochastic setup. That's the way I would look at it. Yeah, Darvis plus slow stochastic. All right. Let's see. As far as what is the, hang on, I'm looking at it, one of the questions in, hey, bot, I can't, what is the link to that site? The Koyfin, Koyfin. Yeah, bot shared that. As far as the ETFs, no, it's not premium. It's a free site. You would just have to choose the sectors you want or industries you want to follow, McVie. All right. Let's see. Bot is mentioning bonds. All right, yeah, let's go take a look at bonds. Sure. All right, let's see what bonds are doing here. Okay, a lot of questions on bonds. Sure. And I'm happy to, this might be a good one to look at tonight in the free video over at the Simpler Trading YouTube channel. Bonds are in a precarious place because bonds are actually, there's two narratives in bonds. Every trade is a story. Does everyone know that? Every trade is a story. There's always a trade story. In the case of bonds, it's two stories. Bond traders are very clever. They always want to play a game of chicken with the Federal Reserve. And they're also reflecting concerns about recession and Fed action. So those are two narratives. Are we going into a recession or not? and is the Fed taking too long? The fact that bonds are still below the 200 is telling us that the bond market, higher yields are what we're seeing still. We're not really seeing a steady uptrend, which means we're not seeing steady lower yields out of the long bond or the 10-year for that matter. We're just sitting below that Darvis level, which happens to be parked about the same spot that the 200 is. Till we get back above it, there's a certain amount of wait and see, maybe a little bit of pessimism being priced into bonds and a little bit more bearishness. Red grab candles, bearish hemisphere. So focusing on the gold zone of the daily price movement range would make a whole lot more sense. Once we get above it, it's going to be a completely different story because we still don't have a clear path to June is most definitely when we get the rate cuts. That's likely why bonds are still sitting there complaining, telling Powell and company, y'all are taking too long. You're going to hurt the economy, and there's no reason for us to start to buy or lower yields in that regard. So that's what that's reflecting. And I would probably still be a smidge bearish with the likes of ZB or TLT. All right, so that's a wrap. That's a wrap, gang. As always, thank you so much for being here for Charts and Coffee. We've been running this show now 3 years in the morning, so I thank you for taking time out in your morning to be here with us. Thanks for smashing that like button. Thanks for the questions, and I'll see you on Sunday for the Top Tier Outlook show, 6 p.m., same place. All right, gang, be good to each other. I'll talk with you soon.